Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, June 22nd, the year 2018. Let's talk trading with the weekly wrap up. Okay, I hope your money and risk management was spot on, flawless for this week. I'm going to trust that it was, because if you've watched these videos, you know that this is spoken about almost each and every video when it comes to trading. Okay, for the month, you can see, I believe we started the week somewhere in here and we're ending the week somewhere in this upper wick zone. And so you can see here on the week, we've had a down week on dollar yen. And so far, excuse me, one gap did not fill. So across the board would have been a good play there, playing that weekly open gap. And you can see here the gap just didn't fill for the week. Okay, let's move on. Looking at the daily, you can see we had a slight breakout to the downside, only good for about 4 pips, reversed back into the daily wick zone where we sit at the moment. And we know price doesn't like staying in the wick zone for the day. So look for it to either get above that open or below that low one more time. I mean, there have been a few times where we've had a close in a wick, and here's one right here, but you see that was a doji. And here we had a long wick, so once again, you had a close in it. But the short wicks, usually not so much. And if you see here on the dashboard, some nice movement today range-wise. All those in the magenta over 100. And you can see here the yen sitting at a lousy 41. Oh, and once again, this is the 2017 version. Haven't started on the 2018 version. But one of the things, see, I put a threshold here, but I realized I really need 2 more thresholds. You need a midpoint type threshold, or like a 0 threshold, like if you have plus and minus numbers, and you need a maximum or minimum threshold. So, for example, anything under, say, 40 or maybe 50, I would highlight to show that, we've got a very narrow range, and that would be a warning. Things like don't do reversals on short ranges like that, or don't look for to hit a home run off a tight range reversal. And you can see here the buy zone once again. Let me make this wider. There we go. You can see here you had a short trigger, looks like either a scratch or a loss. A long trigger here, either a scratch or a loss. A short trigger that reversed hard, another scratch or loss. But then here you went to the upside for a win. Now this, if you took this trade, hopefully you were a pro trader, not a novice or an experienced trader, and you would have definitely taken a small profit there. Once again, chance for a small profit or a scratch. And one of the things I've been observing is a lot of times, especially on you can see there wasn't much of a range. You'd just be happy with 3 to 5 pips. As you can see here in the rat zone, there's only 1 pip difference. That's not really a trade there, not a rat zone trade, or not a desirable rat zone trade, I should say. Some you have to pick and choose. The pivot traders, here's the open, there's the pivot, it got taken out. Once again, fading the pivot at the open usually proves to be profitable. Sometimes more than others, just depends on how close the open is to the pivot. In this case, it looked like it was about 23 pips. And once again, you can see that pivot was taken out. Price action, it's right there. You see that one ball green at the line, two ball red at the line. Would have had to wait to pay off. Just like, see here, you got the two ball, so these should all be shorts. Now you have a three ball, you green at the line, and you see the buying's going on. Oh, somebody asked about this indicator. It's the TRO underscore HHLL underscore SW for separate window. And I guess something I'm supposed to do, but I seem to forget it more often than not, but show you the indicators that I use here. So you see there's a 2016, a 2017, and a 2018, and the rest of them are pretty much just out of the mother load of indicators. And maybe, I don't even know if I uploaded that one in the mother load. It was just something I was playing with to show, I think it was a higher high, lower low, and basically, if the candle was, nope, that was not it. I'll have to look at the code. I don't even remember. See, I guess I should have put a show help or something in that indicator. Should probably have labels out here, so know what you're looking at. Okay, price at the line using H1, trading with candle color at the line. And just so you know, this is the wick zone, cross above the high, inside the upper wick, cross below the zone, and this is out of the lower zone there. So you can see yen is inside yesterday's wick zone, which would be these two lines. And also close open off of the weekly and monthly, you can see nice moves trading those lines. Look at that, almost 500 pips, 475 close to open on the pound Canadian. And here we have the wick zone. Once again, price doesn't like staying in the wick zone. And we've got right here a holo setup. I mean, this one's a classic. This is a textbook. Considering I'm the one that wrote it, the textbook. Right here, you can see there's the trigger. These are M5 candles. You can see it actually made a new low. Now we have a bull candle at the line and profit to be had. I just brought up this portfolio just a few minutes ago, and you can see how price is just basically in chop. Not much of a range today. Don't look for home runs. And we're at the inventory reduction bar screen now. You can see here, if we can take out this 94, and there's possible upside there. And just looking at the daily, weekly, monthly opens for the current and previous candles or bars, daily, weekly, You can see here we've got the daily open at 95. We're 4 pips below it. 11 pips off the bottom, the daily low. 31 pips off the daily high. And right now we've got selling going on. And looking at the Einstein line right here, you can see really tight ranging. So going back, weekly wrap up. We talked. I gave you 2 more videos on why you're not getting better at trading. It's funny because once you start on a path or you do something, you start noticing very similar things out there. It's almost like maybe subconsciously I'm picking up on what's out there, then I do it, then I notice it consciously, because I can't believe the number of videos and emails that are going on right now talking about, the mistakes that you make in trading. I must have gotten at least 3 over the past week from different traders or trading companies, trading education companies that talk about mistakes that traders make. Some say the top 3, some say the top 10. So it's kind of funny reading that at the same time I'm doing a series on it. Not to mention, these hot indicators that they're trying to sell me. I just crack up because obviously they got my name off of a list somewhere and they're just sending me this stuff. And every now and then I'll watch their video or look at the whatever material they're showing about the indicator. And usually either it's some shiny new object trying to get my attention with, something that looks cool on the screen, or it's some, special new squiggly line. I saw one yesterday. Why, is RSI better than stochastics? And the guy go, RSI is much better because of, when we back test. I just have to laugh. Oh, it's like they're both oscillators. I mean, really, you can tweak them all you want in the back test, and because I'm sure somebody could come up with a back test that shows stochastics was superior to RSI. So it's basically a bunch of curve fitting and miscellaneous other garbage. But there's one trader who mentioned out on the Facebook group that there was this other guy that sounded like me. So I watched the video and it's just like, yeah, that guy does kind of sound like me. He basically created a buy zone using the first 15-minute candle of the day and shows how price exits that zone by usually a huge amount. One thing he didn't show was the frequency distribution. And I'm thinking I'll have to go check I don't know if my price travel analyzer, or I think maybe my new frequency, not new, but the one I wrote last year, the frequency distribution indicator. I think you can actually select the time bars, so I could filter out or select that first 15-minute bar, the bar that goes from 00 to and stops at 15, and take a look and see the actual range of that bar, see what the frequency distribution is over the course of the day. And then I guess you probably have to write another one that says, okay, how far did price move? Not that on those days, what was the high of the day minus the high